Crypto isn't just a test of strategy, it's a test of psychology. The biggest gains and the biggest losses often come from emotion, not logic. When prices rise fast, excitement takes over. When prices fall fast, fear takes control. Fear of missing out makes short-term spikes look like once-in-a-lifetime opportunities. But smart investors pause, they ask, is this aligned with my plan? Does this fit my risk tolerance? Impulse creates chaos, clarity creates consistency. Discipline means sticking to your strategy even when it feels uncomfortable. It means not increasing your investment just because everyone online is celebrating gains. It means not abandoning your position just because headlines look negative. Emotional control is financial control. The crypto market moves in cycles. Hype cycles, fear cycles, growth cycles. But long-term thinkers understand that volatility is temporary, while strategy is lasting. They focus on education, security, and calculated decisions. In crypto, your biggest advantage isn't speed, it's self-control. When you master your reactions, you strengthen your results. Because markets test patience and patience builds confidence. The difference between reacting and responding is the difference between gambling and investing. And self-control isn't something you suddenly have, it's something you practice. You practice it when you don't chase a sudden spike. You practice it when you stick to your allocation plan. You practice it when you step away instead of making an emotional trade. Every decision either reinforces discipline or weakens it. The market will always create noise. Social media will always amplify extremes. There will always be someone claiming massive gains or predicting massive crashes. But smart investors filter the noise. They rely on preparation, not pressure. They rely on research, not reactions. They rely on strategy, not sentiment. Because psychology compounds just like capital does. Small emotional mistakes, repeated often, create large losses. Small disciplined actions, repeated consistently, create long-term growth. You stop looking at every movement as a signal to act. You stop measuring success by daily price changes. You start measuring success by how well you followed your plan. Because discipline isn't proven when things are easy. It's proven when emotions are high. When everyone is euphoric, can you stay grounded? When everyone is fearful, can you stay rational? That's psychological strength, and psychological strength creates stability. You begin to detach your identity from your portfolio. A red day doesn't define you. A green day doesn't validate you. Instead of reacting to short-term fluctuations, you anchor yourself to long-term principles.